so much for joining us today. We are going to be talking about life settlements today and recognizing the market value of life insurance. It's great to see we're joined by so many of our clients and trusted advisors and some of the folks we've been working with for years and some new folks as well. So before we jump off, I'll get us started with some introductions, just so you know who's talking to you today and what we're talking about. So for those that don't know me, my name's Brian Sack. I'm one of 3 partners here at Granite Harbor Advisors, and I'm joined by my good friend and esteemed colleague, Jamie Mendelson, the EVP at Asher Group. So thank you, Jamie, for joining us today.
Oh, pleasure to be here.
Yeah, for sure. So for those that don't know, we have a singular purpose at Granite Harbor, and that's to help families live their best life. And I know that Jamie and her team share a lot of the same core values that we do. So hopefully today we'll just give you some information and some education around the life settlement market and how it may apply to you either now in your life or at some point in the future. So before we get started, we've got to make the lawyers happy. And so I'll cover a couple of disclosure points. Just keep in mind, the things that we talk about today are intended to be educational in nature. The information we share should not be considered in any way financial advice or investment advice. And naturally, I'm sure there will be some questions come up as we go through the conversation today. So if they do and you think of something that you'd like to ask, use the chat feature, and we'll do our best to get to the questions live together. And if we don't, we will be sure and have one of us reach out to you once we're done. So now we've got all the legalese out of the way. Let's jump in. So Jamie, big question of the day is, what the heck is a life settlement and how might it apply to me?
It's a great question. So I'm glad to be here today with everyone and to talk about it. So on the screen right now, you can see the definition of what is a life settlement. The life settlement option has been around for close to 2 decades. A life settlement by definition is the sale of an existing life insurance policy for an amount greater than the surrender value, but less than the death benefit. So when we talk about life settlements and you think about life insurance and the opportunity, as it says, to liquidate it or sell it, it's very similar to other property or asset sales. So what we're talking about is taking a piece of property that the policy owner owns and being able to actually sell it for more than the surrender value that the carrier would provide, but less than the death benefit. So the same way you can sell your house in an open market, you can actually sell your existing life insurance policies in an open market.
Yeah, and I think that's such a profound observation for most people, right? Because if you're like most of our clients, you don't see life insurance as an asset at all. You see it as a liability, you see it as an expense on your cash flow projections, but you don't see it as an asset on your balance sheet. And so what this is reinforcing is the fact that it truly does have a value over and above the cash that's sitting inside the policy. And it's very important to understand that.
It is. It's an option that should be explored before a policy owner ever considers surrendering or lapsing a policy. So really what we're talking about today isn't a product sale. It really is a solution. So the goal is, throughout our conversation today, to really hone in on the fact that, individuals, companies, charities, whomever the policy owner might be, trusts even, that own life insurance, before they ever exit it or materially change it, see if this life settlement solution is a viable option. Can the policy owner sell that policy for more than the carrier will provide in the surrender value, or more than they would get by just lapsing it or throwing it away?
Sure. And I think a key example that a lot of people don't think about, even folks that may be more familiar with the life settlement market in general, are term policies, right?
Absolutely.
So you've got term policies that have no cash value, and in the policyholder's mind, those are worthless assets, right?
Yeah.
But what you've seen and what we've experienced in a lot of cases is those actually do have significant value, particularly if they have conversion privileges to a permanent product.
They can. I mean, they appear for many companies, for example, as zero on the balance sheet. I literally just had a phone call with an attorney that was calling about a valuation on a policy that a company owned, was speaking about a universal life policy. He's heard us speak at different meetings. We'll probably get to it during this conversation. That universal life are some of the most attractive policies in the life settlement market. And as we were talking, I asked, does the company own any other policies? And the comment was, yeah, they own a term, but really we're looking to see policies that have value. And so I had that same conversation. We can't just disregard term policies because they appear to be zero on the balance sheet. We sold an $8 million policy for $2.5 million.
Wow.
An $8 million term, zero on the balance sheet for $2.5 million.
That's $2.5 million of found money. My goodness.
Absolutely. Absolutely.
Wow.
So that's great.
So obviously, guys, life insurance plays a lot of different roles for families and can serve as a very, very important cornerstone to a good, solid financial plan in the form of death benefit when it's needed. And so by no means are we saying, go sell all your life insurance, because it's always going to have, a very, very important impact to your overall foundational planning. But in circumstances where the value is more beneficial to the family today than it is waiting to an unknown point in the future, the settlement market is something that you should simply be educated about. And so let's assume that you do go into the settlement market. This next slide just really outlines the importance of having good representation. And so, Jamie, can you talk a little bit about the difference between the duty to the client from a fiduciary capacity versus the duty to the investor, and some of the dynamics that you've seen in this marketplace?
Absolutely. And this is probably one of the most important slides that we'll review today, understanding who represents whom in the transaction. Brian, both your company, our company, Asher Group, we're licensed by departments of insurance and financial services nationally, licensed to represent the policy owner. Our license as a life settlement broker says that we have a fiduciary duty to the client. So when you look at the slide that's on the screen, everyone that's on the left side of the line represents the policy owner. So from the advisory team to the life settlement broker like Asher and the policy owner, we're all on the same team, 100% aligned. And our firms are actually licensed, saying we have a duty to that policy owner. On the opposite side of the transaction are the buyers. These are the large institutional capital sources that are representing their investors. Those buyers are licensed to represent the investor, not your client, not the policy owner. So their due diligence is to the investor, not the policy owner, not the seller. And that's really important because some of those buyers, quite a few of them, are spending millions, if not tens of millions of dollars to disintermediate, advisory teams like ours, brokers representing policy owners, to go direct to the consumer and not have to participate in what we're going to talk about in a minute, in a real auction for the policy. So knowing who represents whom, making sure that you have seller representation can be very impactful to your clients. And knowing that, asking that question, a simple question, who are you licensed to represent, can really dramatically influence the opportunity for policy owners to secure the highest value from the regulated life settlement market. And these buyers, as it says on the screen, these are large institutions. They're buying hundreds, if not thousands, of policies on different lives, building large portfolios. And these are private equity, hedge funds, pension funds, large multifamily offices, and asset managers.
Yeah, great takeaway there. It's just like any other valuable asset that you're taking to the market. You want to make sure you have good representation with a professional sitting on your side of the table, right? That's advocating for you and advocating for the value that asset represents to you and to your family, versus taking it to a market when you may be approached either from one of these larger institutional outlets or something that you saw in the news media, or, hey, come sell your policy to us, those types of organizations, without that true fiduciary representation for your specific asset. And having representation as the seller is key to getting the right value. And so you mentioned the auction marketplace, right? So competition creates value, and don't always take the first offer at face value. And that's what a lot of the buyers representations are trying to get policyholders to do, is to take that first offer at face value and say, hey, this is what it's worth. So can you speak a little bit about what we're seeing on the screen here?
Absolutely. And, I love how you said advocating for the seller, advocating for the policy owner, because that's so important. I think you've seen it in the cases we've worked on together. There is, a science to crafting the strongest case file possible, to then go to market and negotiate on a policy owner's behalf. And we see it every week where you have clients that don't realize, policy owners that don't realize that they've aligned themselves with a party that's 100% misaligned with them, and are having that buyer build their case file. Right. I think many of us have seen those signs as you're driving down the road that say, we buy ugly houses. Right. And like, do they really buy ugly houses? Well, no, they're trying to get someone to call before that house goes on the market so they can swoop it up for a less expensive price. Well, that's an example of what happens every day in the life settlement market. There are these buyers that are trying to swoop it up for not the fair market value of the policy. Does anyone say swoop it up anymore, by the way? Sorry.
Oh yeah, that's
what came to
my
mind.
daily vocabulary.
Okay, good. But this is an example of the type of auction that Asher creates as a seller representative. An example of Asher going to market. We're accessing, you can see on the column, about a dozen different buyers. Each of those buyers represents 1 to 10 capital sources. So we're talking about an audience of dozens of capital sources competing for that policy. So going to market, driving the value, driving competition, leveraging our knowledge and the other offers to negotiate the highest value. I mean, look at the difference between buyer number one and offer number one versus, the final offer in the auction that hit the ceiling at the 475,000. Imagine, that buyer number one scenario. We see this again all the time. Policy owner, doesn't have seller representation, reacts to some advertising because, they haven't heard of this market. They think they're doing a great job. That 75,000 is 3 times their surrender value. So, 3 times what the carrier would give, when in reality, by, Brian, firms like yours being involving Asher as a life settlement broker, creating this auction, this client ended up with over $400,000. So a significant impact to an auction seller representation versus no competition.
It's incredible. Yeah, because without the knowledge of what competition might bring to that value, you're thinking, heck, I got a 3x offer on my cash value sitting there. This is a great deal.
Yeah.
And you'd have no idea that, going through this process with the firm like yours can create such tremendous value and such a tremendous difference in an experience for the policyholder. This is really great.
I appreciate that.
So can we talk a little bit about, the typical profile of client that you see that would generally have the best results in the life settlement space, and let's set aside for a second the specific needs and the specific facts and circumstances on why a family may want to retain their death benefit. But can we talk about, okay, once the decision has been made that we do want to settle a policy and we want to take that policy to market, what are some of the typical things that you look for to say, hey, this is a really good opportunity for us to try to go settle this policy? Can you speak on that just for a minute?
Sure. The market right now is one of the strongest markets that we've worked within. And again, we've been in this space for close to 20 years. There's a lot of capital competing for policies. It's actually expanded the parameter. So it's going to be actually a little bit even wider than I would say what I have on the screen right now. Majority of buyers are buying on older insureds, usually over the age of 70. There's been some expansion to insureds that are in their mid 60s. All face amounts fit the market. There's really kind of a floor at about 100,000 of face. Most of these large institutions aren't buying smaller face policies, but from 100,000 of face upwards of 50 million plus of face. So we're talking, pretty much all policy types on individuals or survivorships, regardless of the owner, individual, trust, corporation, charity, can all fit the market. So we've said older insureds, all face amounts. From a product standpoint, we're usually talking universal life policies or term convertible to UL. That's really your ideal client for where the market is today. And I would say if there's any health arbitrage in the policy, meaning someone was written preferred and now they're standard or uninsurable, that change in health since issue can also be really, really helpful in negotiating the highest value. And you see the final bullet on the left side, there's no exam required. I like to point that out because that is a difference between new insurance and monetizing existing policies. Is there's some buyers that will require medical records. The majority of them do, but most of them only need the last 3 to 5 years. But there are buyers today for guaranteed universal life policies that don't require even any medical records. So there's a lot of opportunity in the market, but usually older clients, universal life products.
Awesome. So it's so important to know what you have, right? And this is something that Granite Harbor takes very close to heart. In any asset that we help our families with in managing, whether it's a liquid investment portfolio or a risk-based product like life insurance, we treat it as an asset, as it should be, and giving that asset good food and water over time, monitoring its health, monitoring its performance is absolutely paramount, to making sure that that asset performs in the way that you really need it to for the family. So what you see on the screen here is just the importance of having your policies evaluated every year, ensuring you're fully aware of how that policy is going to perform into the future. One of the things at Granite Harbor we do for each and every one of our clients is we order what's called an endorse ledger. Each year, we compare it to the previous year, and we have the ability to project performance into the future, because that's a key data point in deciding whether this is an asset that still meets the family's ROI hurdle rate, and whether it's an asset that makes sense to continue to hold for death benefit, or if it's an asset that should be considered to enter into the settlement space. And so ensuring that you're reviewing your policies every single year, whether they're individually owned or you're a trustee that's managing a set of policies for a trust, or you're a business that's managing a set of key man policies, whatever the situation may be, it's paramount that those policies are treated just like any other asset, and you have a regular review process to ensure that the performance of those products are going to be continue to meet your needs.
Oh, Brian, that's so true. And I think it is so powerful and significant that your firm is doing that. We see a lot of advisory teams that treat life insurance kind of like secondhand smoke. They have to be around it, but they try to avoid it. So to have a resource like you for your clients, taking that proactive instead of a reactive approach to the life insurance, all joking aside, it's meaningful. Because, life insurance is complicated. Having a specialist like you, keeping your eye on it, taking a look at it, and, incorporating in this fair market value type analysis into those annual reviews, just the opportunity and the impact can really be significant to your policy owners.
So Jamie, can you talk a little bit about how Asher Group can come alongside someone like us and a family or a policyholder to just help to evaluate the policy's value, right? So they're not quite sure yet whether they want to take that policy to the settlement market and sell it, but they're just unsure on what it might be worth. Can you talk a little bit about, the services that you guys offer and just helping a client gain a better understanding of what a policy is worth, and how you work directly like with firms like ours and with policyholders and trustees directly, to just help them gain that visibility on what it should be worth?
Sure. And really, getting in the habit of treating life insurance the same way you treat other ordinary property is something that we speak on and educate different advisory teams, fiduciaries, and policy owners, is getting in that habit. Just like you would never have a piece of real estate, art, or jewelry and make a decision on what to do with it without first understanding the value. We help policy owners do that with their life insurance with just some really basic information that we can help aggregate, or, Brian, and your firm does a great job securing the carrier information that we need, the various illustrations, ledgers that you talked about that you order on an annual basis for your clients, with an illustration that helps us understand those future premium costs, the future cost to carry the policy, with personalized life expectancy or longevity information. So we look at a questionnaire or medical records on the insured, or we can make some just assumptions on life expectancy. We'll analyze the illustration, we'll look at that personalized health information, and based off where the market is currently purchasing, so looking at the billions of dollars of comps we have on file, the comps as recent as today of policies we're actively negotiating for sale in the marketplace in our auction, we'll use all that information so we can communicate with you and with the policy owner, where's that mark-to-market value today? Asher also has certified appraisers on staff. So for other purposes, when you think about ILET protection, you talked about your clients that might be trustees, or if you work with corporate trustees, or different types of transfer for value or balance sheet and portfolio reviews, that ability with just some basic information, a carrier illustration, some health data related to the insured, coming back to you with where would the market value that policy. And that's a process that can take anywhere from a few days to a few weeks, depending on the complexity and how comprehensive the valuation would need to be. But it's something we worked on together. We've worked on together, obviously, quite a few times, and there's a process in place for that.
Yeah, I think it's great. And the big takeaway there is, don't mistreat your life insurance policies. If you see a sign on the side of the road that says "We buy ugly life insurance policies," ignore it. But yeah, no, I can't thank you enough for just sharing your expertise in this space. You and your firm and your family are true examples of what it means to serve with a servant's heart and doing the right thing for people. And we really appreciate your relationship and your friendship, and are very thankful that you took the time to spend with us today. So if there are any additional questions or further questions that you think about after we wrap up today, we do have our contact information up on the screen here. So feel free to shoot us an email, give me a call. If it's a question I can't directly answer, I'll make sure Jamie gets involved and can back me up. But other than that, we appreciate your time today and look forward to our next visit. All right.
Wonderful.
Thanks a lot. Thanks, Jamie.
All right.
Take care.
Thank you.
Bye-bye.